$1 million isn't cool. You know what's cool? $1 billion. Investor Beat starts now. Thanks for watching. I'm Chris Hill, joined by fan of The Social Network, David Hanson. We were talking about that earlier.
It's a good movie.
Great movie. Great movie. Let's get right to the earnings. Penney, the most traded stock on the New York Stock Exchange today, they reported a profit for the fourth quarter. How great is that?
Profit on the paper. Big part of that was a tax asset that they had. So the actual underlying performance, still pretty bad. So the operating loss. It's turning around though. Slowly, but is it surely? Can I say surely yet?
Yeah.
I'm not sure. Same-store sales up 2% from the previous year. So moving in the right direction, but the previous year was so epically bad. I'm not sure that's a huge good thing for the company.
But things have been bad, like really bad for Penney for a couple of years now. If you're an investor and you're looking at this and saying, well, wait a minute, they only need to do slightly better for me to make money off this investment, I'm going to get in even with the pop today. Are you interested in this stock?
I'm not interested in the stock, and I've been on the sidelines, and I hear that. I hear a lot of people say this is cheap, there's upside here, and okay, but with the turnover in management, with just the underlying performance and kind of the tidal wave of competition coming against them, whether it be online or other retailers, it's just too much for me to wrap my head around and get with the story.
All right, let's move on to Noodles & Company. Fourth quarter profit and revenue coming in lower than expected. This is one of the big IPOs of 2013. Stock popped 70% on opening day. Is this reality setting in for Noodles & Company?
I think it is. The price is ridiculous on Noodles & Company, in my opinion. It's trading, I think, like 17 times or 70 times next year's earnings. When you look at kind of the leader in the fast casual space, Chipotle, they're at half of that, like 35 times next year's earnings. So I don't know why the market thinks fast casual is so easy to do and that Noodles & Company is just going to step in here and be the next Chipotle. It's not that easy. And you look at Chipotle, they're founder run. I mean, Steve Ells, he's an amazing CEO over there, has grown this company from day one. Noodles & Company is not that. The founder is no longer involved in the picture. Yes, a Chipotle COO is now running Noodles & Company, so maybe you could convince yourself they've got great management there, but it's not the same story as a Panera, also founder run by Ron Shaich there. So this is a hard space. It's not going to be easy. They can maybe do it, but I'm not interested at today's prices.
They also lowered guidance today. They cited the weather. Last week we saw Panera do that, and they got the benefit of the doubt from investors. Noodles & Company not getting the benefit of the doubt today when they're citing the weather. Is that, again, is that sort of a sign of sanity or just, are people just being tougher on Noodles & Company?
They haven't earned the right to get past the weather. They've only been public for what, six or so months? Panera's been around for a long time, and they get the pass.
All right, eBay hitting an all-time high today as the company fired back at Carl Icahn, the chairman of eBay, saying that Icahn's statements earlier in the week were false and misleading. It's starting to get pretty heated here. I mean, what started with Carl Icahn saying, hey, look, you guys really need to spin off PayPal, an idea that's been around for a while, is now getting pretty chippy. Who's right?
He's kind of right, but he's going at it about it in kind of, I guess, the Carl Icahn way. And he's been on an amazing winning streak. We were talking about before. When's the last time this guy was horribly wrong about something? He was right on Netflix, right on Herbalife, right on Apple. I guess you could say he was kind of right on Apple. So I don't want to bet against him, and I do think PayPal would be valued at a higher multiple than it is inside of eBay today. But I'm siding with the overall eBay company right now. I think it does make sense for them to be together for a little bit longer, maybe ultimately spin them off, but for now, I'm siding with eBay.
Speaking of good runs, eBay, the stock, has been on a pretty great run the last few years, hitting an all-time high today. Does it look expensive, or does this look like, no, this is exactly what this stock should be at right about now?
I don't think it's expensive. I think there's a lot of opportunity in the space. It's just a matter of, it is mostly PayPal, and PayPal is going to be the driver here. If PayPal can really continue to add users and grow revenue, this stock looks cheap to me. But if it can't and it loses to market share to other people coming into the space, like Amazon, like Apple, who's even considering coming into the payments, then it's a concern.
All right, that's going to do it for today's action. Give me a stock you're watching. Maybe I can put on my watch list.
I think you own this stock, so I do not, but I'm putting it on my watch list. Coca-Cola, this has been one of those businesses that you ask anyone, what's a great business you want to own? Everybody says Coca-Cola. You look at the distribution network, the products, the brand recognition, it's all there. over the past year, the stock is basically flat. It hasn't gone anywhere when the market's up over 30%.
Don't I know it?
You do. So it's got me thinking, is this a great business starting to get closer to a fair price? So that's why it's on my radar.
When you look at the portfolio of beverages in Coca-Cola, do you think it's inevitable that more and more, as we've seen over the last 12, 15 years or so in North America, soda sales just on a steady decline, more and more they're going to have to rely on non-sugary sodas? I'm thinking about Honest Tea, Dasani water, that sort of thing.
It is going to be more and more, but it's not going to be the entire company. I mean, we're not going to get to a point where soda is not the biggest driver at Coca-Cola. But it's not just the existing brands like Honest Tea or Dasani. They can go out and acquire new brands. That's a big goal of a lot of drink companies that start today is, I want to get bought out by Coke because of the distribution network. So they have a lot of opportunity.
All right, for David Hanson, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.